How's it, guys? Welcome back to FX Rhapsody. Today we're going to be doing analysis on two Japanese yen pairs. It's going to be the British pound Japanese yen and then the US dollar Japanese yen. Before we hit the charts, just go visit my website. It's on the bottom left corner over here, where you can download under the resource tab. You can download the COT reports, which we will be using for our analysis. It's all for free on my website. Also, there's some nice resources on my website regarding trading, especially if you're starting out on trading. Just go visit my video categories. And then also my preferred brokers, guys. These guys are brilliant. To go check them out. Brilliant spreads, margins, support, anything and everything that you need from a brilliant broker. Okay, so let us hit the charts. We're going to start off with our not the COT reports. We're going to be starting off with our British pound Japanese yen. We're going to be doing top-down analysis. So we are going to be starting on the daily time frame, moving down to the hourly. So what can we see on the British pound Japanese yen? On a daily time frame, we still see that nothing much actually happened on the daily, but we can still see that high being intact. We can still see this low being intact. Intact meaning that we haven't seen any liquidity being taken out on those highs and those lows. We see price going down, going up, okay, and then coming down again, just hovering in between these two areas. We see an area in the market that it has been respecting. I think my mouse is acting up a little bit. So basically you can see this area in the market, and if I just zoom it in a little bit, you can see how this area has been respected, acting as a previous support area, breaking through, going up, taking out that previous high, and this was last week's analysis, going down, being respected again, and then going down, being respected once more. So that area in the market is being respected. So let us go down to our lower time frames, excuse me, and see what is happening on a 4-hour time frame. Okay, so 4 hourly, what I'm looking at currently is, if you can see this movement to the downside, you could have caught some nice little amount of pips. So if you used your Fibonacci, I'm so sorry, my mouse is acting up so badly this morning. So basically what you're doing is, sorry, let me just do that. Okay, so let's see if this played out. There we go. Okay, so we had a swing high, swing low, price going nicely, tapping that 62% area, which I always talk about, and then price dropping again. Okay, then if you missed that one, you could have had it from this swing high to that swing low, swing high, swing low, price again going up nicely, tapping that 62% and then dropping once more. So that's lots of pips that you could have caught. Okay, then again, so it's following that trend downwards, as you can see. But what we're looking at now is, you see the swing high, swing low, price going up, hitting that 70% optimum trading entry area, and it went down, but now it's going up again. Okay, will this be the area that price is going to break? Structure, meaning is price now going to start moving up? So price went down, it came up, it is currently sitting right there. Okay, so that is our high that I've been marking out now. So you can see price going up, going down, going up again, going to that area, but not tapping into that liquidity, not breaking that area. Okay, so structure is still in play. So is it a case that price is going to go down from here, or is that a case of price breaking up to that upside? Okay, so this is what we're going to be looking at. We go to the hourly time frame. So what we see in the hourly time frame, I showed you now that the Fibonacci, how you could have taken those trades on the Fibonacci on the previous time frame. On this one, we could see another area of entry. We have some fair value gap, some imbalance in the market. So basically, this is the area where structure was broken, okay, as you can see there. And it created a nice area, a nice gap in the candle. So nice area where price retraced back to, and then once it hits that area, you could have sold down for a nice amount of pips, you know, towards the last bit of this week. So that was almost 200 pips that you could have caught down just using this strategy of order block fair value gap, not order block but fair value gap imbalance in the market. But now we also have this one over here, which price can get drawn to, because price action draws towards those areas, those gaps in the market. Okay, so I'm just highlighting that area out as well. And then what I'm doing is I'm going to be looking at the obvious that we just saw on the 4-hour time frame, that high. So you can see price going up, not tapping into that area, not breaking that structure. Okay, we have got that high that I'm going to be looking at, and then obviously we're going to be looking at this low here. So as you could see on the previous time frame, you know, all the lows been taken out every single time. Just zooming out, that was a low been taken out there, and then you can zoom in again. That was a low been taken out over here. So you see all those lows being taken out, all the highs are being intact currently, all the liquidity lying at the top there. So just for reference sake, that's going to be another one that we're going to be eye marking. So first of all, we are just looking at this area. Which one is going to be broken? Which one is, if price breaks above it, we're going to look at any form of buy opportunities. If not, price might just be tapping into that liquidity and moving to the downside. Or we could see a break of structure where price breaks this area and they're going to be hunting all the liquidity that's lying on the top there for your 4-hour time frames. Okay. Looking at the COT reports, we're looking at the British pound first. So on the British pound side of things, we could see the net position getting a bit, you know, just hovering in that area. Previous week, we saw lots of longs being opened, lots of shorts being closed. Okay. So the British pound got a bit stronger, as you can see this momentum going up. And now this weekend, we saw the change where still longs being placed in the market, but a lot more shorts being placed. So that is pushing that negative net position, or that net position a little bit deeper into the negative. But do we see that shift? So that is British pound. Now we're looking at the Japanese yen. So on the Japanese yen side of things, okay, what we see is we see a lot of longs being opened, but again, more shorts. So relatively the same scenario happening on the yen side of things as on the British pound. So you see a negative net position getting a bit stronger now, or weaker, if I can say that. So you can see that little movement down. That's why I've created this little chart, so you can just see that movement on the net position. Because looking at this all the time, you know, you kind of, you know, get lost sometimes in the numbers. So just looking at it on the chart side of things, you know, it makes a bit more sense, where you can see that drop in the market. So now it's all to do with which one is going to be stronger between the two pairs. So we will definitely be eye marking out those two areas to see which one is going to be taken out first. Let's move on to the next currency pair, which will be the US dollar, Japanese yen. We're going to be starting on the daily once again. Top-down analysis, guys. You need to see the whole picture. Okay, don't just trade one time frame. You know, go from the top, especially in the beginning of the week, just to see where you are in the markets and where price is, where is it going to go. Just eye mark or earmark, or just mark out on the chart areas in the market. So what we see on the daily time frame, USD dollar, Japanese yen. So just zooming in a little bit. Nope, that's not what I wanted. I just wanted to move it a bit. Okay. Let us look at what we saw previous week. A little bit of previous week analysis. So we saw that price got taken out. Okay. Liquidity got taken out at the top. Price action hunting that liquidity. Now it's gone back again. Now it's just hovering in here. So you can see all these nice long wicks. Price is a little bit indecisive where to go. Will this be a sign of weakening in the bullish run that it had for the last couple of days or weeks and months almost? So price just weakening a little bit. Let's see what happens. You can see there's a little bit of upwards movement in the market. Okay, price respecting that little trend line. So, you know, interesting times for the Japanese yen and for the US dollar. Actually, is it weakening? Is the Japanese yen going to get stronger? So yeah, let us have a look. So going down to your 4-hourly time frame, just zooming in a little bit. Okay. So previous week or last weekend, I was highlighting out areas in the market. So we're looking at this low, right? So that's the low. I'm just going to draw to the side because that is still intact. So that's the low. Liquidity, lots of liquidity lying here. But again, we have got all this liquidity lying here as well. Okay. Oops, that's not straight. I like my stuff nice and straight. Okay. So I'm just going to make some clones. Wait, I'm really struggling with my mouse today. There and there. Okay, I'm just looking at those areas as well. So you have got high, lows, highs, lows, highs, lows, highs. Okay, so still all this liquidity lying up here. So what I was talking about last week was, let me just see, we had this low going up, coming down. No, it was over here. Choop, 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 choop. There we go. I was just jumping a little bit back in time now. So last week we talked about this area. Okay. This was a high. And I was talking about this area being broken. Okay, right about there. Not straight. Okay. And then what I was saying is, and this was where we were at last weekend. And I was highlighting out this area as well. So what I was saying to you was, we had these areas, and you'll see it now. I'm going to leave it in for the hourly time frame. You'll see it much better. So we had a low. We had these highs being taken out. Price came down, went down again. And I was still saying, we want to see price breaking this area in this market. Just tapping into that high. And then basically tapping into that. So, which it actually did. So we're going to look at the hourly time frame, and it explains it a little bit more. Much more better. No, much better. There we go. My words is confusing today. So here we go. So we had this high, and that high, as you can see. So I was still saying price took out that high. We had a fair value gap area here, which you could have taken up, and then price came down. It turned short of that previous high that was marked out. Okay, and I was still saying I would like to see price going up, hitting that area, which it did. So price went down. Okay. After that, so it made a nice movement to the downside. And then all of a sudden, just zooming in, it broke structure again, meaning it broke that area with a nice bullish candle. Okay, so this is the area that you could have gone in or marked out. Look at that. Once it broke that structure, you could have just highlighted that area because it created a nice imbalance in the market, in the candle. Nice fair value gap area. Price went up and then it came down again. Okay, so it hit that area, and that's a nice area of entry that you could have taken. And then price moved up, and where did it go to, and what was your target going to be? Obviously that previous high that I was talking about, and that's a nice 100 pip run. Even if you just caught that one for this week, it's a nice 100 pip. I mean, that was the last little bit of this week, trading. It's a nice 100 pip only on one pair. Guys, always be patient with your trading. Don't just jump into your trades. Just want to see if you had to do the, I'm not sure, this was just falling short. It was actually not. There we go. So you had, let me just take out, okay, yeah, let's leave it in for now. So you have your swing low, Fibonacci, swing high, price going down again, retracing to your 62%. See how nicely everything adds together. That's just more confirmation of a nice little buy up, and then price getting taken, or the structure be, or liquidity being taken out at the top. So that's, again, just using your Fibonacci together with, your fair value gap in the year. it's just more confirmation of your trading. So guys, don't throw away. I like trading these two strategies. Let's not call it strategies, but it's price action, guys. That's all it is. Okay, so try and practice it, and the more you do it, the more you'll see it. So currently what we're looking at, excuse me, is I am just going to take this one out. So I'm going to take that out. That's a high that's been taken out. So now I'm looking at that high. Okay, that's a high in the market. And I'm looking at that low. So these two are the keys. So will price now go and hunt this liquidity that's lying here, over here, and over here? Or will price start moving up and then start hunting liquidity that's up here, and eventually that top one that is still intact over there? Okay, will that happen? So we will mark out that areas. Again, let's just jump to the COT reports. We just looked at the Japanese yen, but let's look at it again. So basically we can see price going up and then moving downwards. Okay, weakening a little bit against the US dollar, and that is why we're seeing that little short little movement. So a little bit of indecisiveness in this pair currently, like we just saw on the daily time frame. So price just not knowing what to do, you know. But again, we have got a Japanese yen that went stronger in the market, starting to looks like it wants to weaken down a bit, but anything can happen, especially with the US dollar. Very indecisiveness, what's going on there now. You know, lots of talks about, you know, recession happening soon and all that kind of things in the markets and in the news. So, you know, let's just keep an eye out on this pair. Highlight those two areas and let's see what's happening. So guys, that's all from our side today. I hope you enjoyed this analysis. If you did, please hit that like button, hit the subscribe button as well, and the notification bell for, you know, then you get notified for your videos that's coming your way. I'm definitely doing some more analysis on some currency pairs this weekend. And so guys, yeah, I hope you have been having a wonderful weekend. Stay safe and happy trading, guys.